What's up, everyone? So, China is waging war on the US when it comes to rare earth materials. The country is restricting exports for some very, very important rare earth materials, which are required for semiconductors to run computers, as well as EV battery materials. So, those two industries are really being hurt by this new exports, requirements and restrictions that China is setting forth on the rare earth material space. So China is restricting the exports of two metals key to manufacturing of semiconductors. Its commerce ministry said late Monday a warning to Europe and the United States in their escalation technologically war trade war, over access to microchips. So these new regulations imposed on grounds of national security will require exporters to seek a license to ship some of these rare earth materials starting August 1st. China's commissary minister said applications for these licenses must identify importers and end users and stipulate how these metals will be used. So basically, they're cutting off access to these rare earths without some type of logic or rationalization for what you're going to use this for. And one could assume that China's not going to allow you to build out military or critical infrastructure with rare earth materials that they have mined themselves. So we understand the news now. This offers an opportunity to existing U.S. companies that are already mining rare earth materials from the ground for the United States. So although this is definitely not a positive thing for the general market, especially the United States as a whole, it is a positive for some U.S. traded stocks. And to give you some of those stocks, let's take a look at MP Materials. So I'll jump into the fundamentals of this company in a second, but first off, I'm going to take a look at the chart here and give a price prediction for shares. So we can see we've risen, almost about 10% off of the lows here. Really about almost 20% and another 5% here today, or 8%, I should say, here today. So definitely a strong move on the backs of this news, but I did want to at least touch on the fact that the stock is finding some resistance at about the 100 DMA, which sits at about $25.50. So how I will be trading this stock is, there's really three ways. You could look at this stock as a long-term investment on, the expansion of EV and, semiconductor processing here at home in the United States, which then you wouldn't really need to look at the chart, right, if you're a long-term investor. But for those that are looking to trade, I would really play this one of two ways. The first way is I will wait till we get a move back down to support at about 20 bucks. Then I would be a pretty big buyer of shares there for a quick move higher. And then the other way that I will buy some shares here is if we see a move above all of these daily moving averages. So just to recap, if we come down to this support level at 20 bucks, I likely believe we hold and move higher. Now, if we jump over the daily moving averages, well, then I think we would continue up to about $36, which is where shares had topped out in February. It's also where shares had topped out in November. So I do see that as very likely. Honestly, I think the most likely scenario I buy shares here is if we just continue higher above this 200-day moving average, then we likely move up to resistance at about $36. So that is my price prediction for shares, is that we move above this 200-day moving average and continue higher to $36 over the coming months. So with that being said, I'll take a look at some seasonality trends. So This screen shows me what month the stock typically does well in, what month the stock typically does poor in. You can see here that July is a bullish month for shares. So, just anecdotal here, but definitely the seasonality trends are lining up in the bull's favor. So, with that being said, let's take a look at some of the fundamentals for this stock. Let's take a look at the valuation metrics for MP Materials here. So, we can see that the stock trades at a 15 times PE, which is pretty expensive compared to the general sector, which has a sector median of 12 times. So not super expensive here, but one thing I don't like to see is that the PE is expected to grow. So that means that the earnings are expected to drop. So the expectation is for PE to jump to 15 to 41, which is definitely not the right way you want to be moving and isn't a good sign for shares. And then when we take a look at price to book, so price to book ratio is at 3 times. And for those that don't know, that basically means the market cap is 3 times the value of its assets on its balance sheet of that book value. And this is below the sector median, but to be honest, being in such an important material space, given these rare earths, I do believe this 3 times isn't that expensive to pay for this stock that's in a good spot sector wise. And then when we take a look at the growth metrics for MP Materials, you always want to see, whenever you see high valuations, you want to see growth rationalize those valuations. And with MP Materials, we are seeing that growth rationalize the high valuation. So year-over-year growth is only 4%, which is about in line with the sector median. But what I love to see is that revenue growth is expected to jump to 22% over the coming 12 months. And that is kind of diverging from the sector median trend, which is seeing a drop in growth year over year. And just to explain all of that, so year over year growth for revenue was 5.7% compared to the revenue growth for the next 12 months for the sector of 4.3. So we're seeing divergence there. Sector median growth is stagnating, and we're seeing growth for the company, MP Materials, increasing. So that's a good sign there. And then when we take a look at operating cash flow, so that is expected to increase 44% compared to the sector median of 5%. And operating cash flow year over year grew 30% compared to the sector median drop of 7%. So overall, definitely seeing growth numbers rationalize the valuation here, which is what you always want to see for a company trading at expensive valuation. So good stuff there. Important to definitely see those growth numbers backing up valuation. So awesome to see that. And then let's take a look at some profitability numbers here. So Seeking Alpha is giving profitability a D plus grade, but honestly, I would disagree with that a bit just because gross profit margin is at 79%, which is well above the sector median. And for those that don't know, gross profit margin basically just tells you what you're making on every single item or service that you're selling. It's basically just revenue minus cost of goods sold. So to have an 80% gross profit margin is very good. This tells you that they're in the right business. They're in a business that is able to make money and will be able to make money at a decent clip, especially if we're able to get those growth metrics that are projected for the stock. And then net income margin at 52% compared to the sector median of 7% is definitely a good number as well above the sector median. Love to see that. And then cash per share sits at about $3.70, which is over 10% of the market cap is in cash. So that definitely gives the company some leeway in terms of M&A and just really having a firm balance sheet to invest in growth, right? Anytime you see a company that is investing heavily in growth, which this company is, it is important to see that they have the assets to invest in growth, which the company definitely does. And as you can see, they're investing heavily in growth, as over the past 12 months, they've increased their CapEx spend to at to the tune of 117%. So interesting there. Good to see those growth numbers and profitability numbers looking very healthy. So then for the metals company, we're coming up over this $1.60 level, which is where shares had topped out in February on the 8th. It's also where shares had topped out in mid-June, and we moved above this level and have, almost jumped, nearly 40-50% since moving over this level. So technicals look great. We're above a major resistance level, and also just on Friday, we got a very bullish sign of momentum. So we had the 50-day moving average cross above the 200-day moving average. And for those that don't know, that basically signifies a bullish technical trend, bullish momentum trend. So this is definitely the most widely watched daily moving average, or just moving average in general, signal. This is called a golden cross and is a very good sign for a stock, especially on a breakout. So as we broke above this level, we're seeing that bullish momentum hit, which for me tells me that shares will likely move higher. And once again, this is a rare earth, U.S. stock, and I'll dive into a bit more granularly on what this company actually does. But first, let's try to make a price prediction for shares. So if we come up to this level, reject, and come back down to support at about $1.60, I will buy some shares, but I don't see that as very likely. In fact, I think the stock breaks through resistance at about $2.85, which is where shares consolidated back in April. I think we break this level. It's also where shares had bottomed out in November of 2021. I think we break this level and continue higher. Where? Well, that is a different question. I think we likely at least move up to about $4 after breaking that level. And then in terms of the upside, the bullish case, the most bullish case for shares. Well, let me show you that in a second. Sorry, this line will not draw straight. Okay, all right. So if we're able to break through that level, I mean, we would really be off to the races, and shares could jump to about $9 over the coming, months to years here. So if we're able to break this $4 level, we really will have, nowhere to go but up in terms of support and resistance. So these are kind of the levels you should be watching if you're trading the stock. Also, it's notable to at least talk about the stock is overbought according to RSI, which could lend some short-term, selling pressure. So if we come up to this resistance level at about $2.90, we may see some consolidation and a move lower for shares over the coming weeks to months. So this stock has been trading for 2 years here, so nothing super crucial in terms of seasonality trends, but July is a bearish month on average, and then August is a bullish month on average, and then the fall is seasonality pretty bearish for the stock. So all in all, I think TMC likely continues to move higher up to about $4. And then let's take a look at what is really driving this company. So first off, this company is more of a smaller cap, high growth company within the rare earth material space. So it's going to outperform when the material space is moving higher. It's going to underperform when the material space is moving lower. So it's really just a high beta name here. So, but this stock basically is trying to mine rare earths in the ocean, which isn't a very widely adopted method yet. But we've seen some recent support just last week, kind of trying to push that message of ocean mining for rare earths. And the House Armed Services Committee directed the Assistant Secretary of Defense for Industrial Base Policy to assess processing of seabed resources of polymetric nodules domestically. So that is basically exactly what this company does. So now that we have the government kind of stepping in and saying we need to get this done, well, that's a big growth driver for this company, and this whole news cycle could be an extreme tailwind for the stock. So TMC chairman and CEO said, given the known deficit of domestic supply and processing of critical lithium ion battery materials, including cobalt, nickel, and magnesium, the House request for the U.S. Department of Defense to explore the possibility to process polymetrical nodules in the U.S. is timely. By onshoring primary processing and refining of nodules, the U.S. could secure supply and achieve mineral independence in four important battery metals, support domestic companies and jobs, and drastically reduce the environmental and social impacts that are currently plaguing geopolitically complex battery material and supply chains. So, what he's kind of hinting at there is that in the Congo, there's a lot of slave labor being used to get these, mining critical materials. So that is kind of interesting to see that the CEO is calling out other companies basically in kind of a subtle way for using that slave labor. And just a brief breakdown of what this company does. The metals company is an explorer of low impact battery metals from seafloor on a dual mission, one to supply metals for the clean energy transition with the least possible negative environmental and social impact, and two to accelerate the transition to circular metal economy. The company, through its subsidiary, holds exploration and commercial rights to three polymetric nodule contract areas in the I won't even try to pronounce that, in the Pacific Ocean, regulated by the International Seabed Authority and sponsored by the governments of Nauru and Tonga. I won't try to pronounce that either. So, this company is very important and is kind of a half court shot, if you will, for the rare earth mining space, but it's a high beta name within the sector. So if you're trying to play upside within this, rare earth space within the U.S. rare earth space, then I think it's a really good name to be exposed to because, like I said, it's a high beta name, and if the space does well, this stock will continue to outperform. And just as an FYI, the company doesn't make money right now. The company is pre-profit and is needing a lot of things to kind of fall their way to move to a company that is profitable. But with that being said, I do think there is significant upside for TMC, especially given how great the chart looks and this recent news from the U.S. Congress and from China, with obviously banning critical rare earth materials for the EV transition and semiconductors. So these companies are two pretty solid picks within the U.S. metals rare earth space, which is being put under the microscope, just really because all of this China news and regulation. So with that being said, I hope you enjoyed the video there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.